Hey, what's up, everybody? Welcome to episode number 111, maybe, on season 1. Sorry, I was never coached properly how to get past 100, so I guess I'm kind of trying to figure out by myself. Anyways, I brought in the Sun's train track today. It's literally just a piece of train track. But anyways, before we get too sidetracked, let's go ahead and dive in to what we're talking about. And today we're talking about my thoughts on The Intelligent Investor, which is a book written by Benjamin Graham about investing. So as far as investing goes in this book, this is the best book that I've ever read about investing, specifically value investing. But this is hands down the information they talked in here, especially if you're looking for something long term. This would be the book that I would recommend, especially if you're new at just investing in general. I would recommend reading his book. If you're into technical analysis, day trade, swing trade, and that kind of stuff, this book does not cover that at all. So really, the book really goes over the ideas and methods behind value investing. For those of you guys who don't know, value investing is more like strategic investing, where you look at financial statements, price to earnings, price to share ratio, all that kind of stuff, and you're going to buy into companies that are undervalued. And then you're also, which is different than technical trading, where you're looking at charts, 50-day moving average, RSI, or Bollinger Bands, or whatever. So it's going to be two different fields. And in there, he actually talks trash about the technical analysis, because he's like, look, if you're looking for a broker or a account manager that does technical trading, he doesn't know what he's talking about. Only go value investing. So it's a very strong argument for only value investing. However, I still technically trade. In there, he discusses about allocating risks, specifically bonds versus stocks, how much you should be invested in bonds and why, and how much should you be invested into stocks and why that's the case, and how you should go about changing that during fluctuations in the market. He also talks about dollar cost averaging, says that if you're just a basic investor, that this is something that you should do. If you know what you're doing, then maybe dollar cost average is not the most important thing. You should maybe look at buying when it's actually undervalued, because if you don't know what you're doing, then you really don't know where it's specifically at. He also discusses different Robo advisors. He doesn't really discuss Acorns and Stash and Robinhood, but he does discuss Robo about robot advisors or robot managers, which are the ones that adjust the percentage in the account every single time it goes up or down a certain percentage. So he talks about that. He also discussed choosing a managed account and what you should look for in a managed account, as well as how to buy stocks and buy. He presents the idea that when you buy a stock, you're actually purchasing a part of that company. So you should actually care about what their financials are. Don't buy into a company that's not making any money or whatever. Basically, is what he's getting at. You're not going to buy into a company that has a bad management setup, where the guy at the top is taking 50% of the shares or something like that. And then lastly, he talks about managing your own account and how to manage your own account and how to go about doing that and setting up your own account and that kind of thing. So if you're a new investor or just an investor looking for a new jump or a new book, I would recommend The Intelligent Investor. It's really good. If you're a technical swing trader or day trader, I would recommend taking a look at it. I mean, there's a lot of valuable information in there about allocating risk that most people in trading and swing trading stuff like that don't cover. So I would look at that and look at trying to set up your account the way that he describes, but only with technical trading or something like that. Anyways, let's go ahead and dive into the question of the day, and that is, would you rather have a photographic memory or be able to forget anything you wanted? I may have already covered this in an earlier episode, but I would rather have a photographic memory, hands down, because I don't care about, my brain will just forget stuff anyways, but I would love to be able to recall memories that I can't remember. You know what I'm saying? Anyways, if you guys have any questions regarding Stash, Acorns, or Robinhood, as well as general investing advice, business, Etsy, or coaching, feel free to post those down below, and I will get them on the next episode. And until next time, don't forget to subscribe right up here and check out my thoughts on the subtle art of not giving an F. And then check out this other video right here. And as always, thank you for watching. I really appreciate it.